morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah. You're watching IndianOpen. Let's go straight to the headlines. Crude prices fall to a one-month low after Saudi Arabia promises to make up for any supply shortfall by producing more. 6 global investors, including the likes of Warburg Pincus, Temasek and SoftBank, will pump in $1.25 billion into Airtel Africa. Kraft Heinz will sell Complan, Glucon-D and Nycil talcum powder to Zydus for a deal worth 4,600 crore rupees. And ArcelorMittal will shell out 42,000 crores for Essar Steel, more than 95% of which will have to be paid upfront, sources tell Bloomberg News. And in results, HCL Technologies meets estimates in the second quarter, maintains guidance for the full year. And higher net interest income and stable asset quality are expected to aid Kotak Mahindra Bank in the second quarter, while volumes may come to Bajaj Auto's rescue. Well, let's take stock of the situation. The world may not be a happy place, but I think the crude fall has led to our markets doing reasonably okay for ourselves. So, firstly, what's happened around the world? Precious little on the global news flow front, aside of course, what's happening to crude. So, amidst growing concerns of slower global growth, crude prices have come off. The Saudi Arabia energy minister has said that the kingdom will keep the world adequately supplied with crude, and the Iranian oil minister has said that US can't stop Iranian oil exports by imposing sanctions on Iran. So multiple news flows coming around impacting crude prices, which are now sub 18 a meaningful way, but around $76 per barrel for Brent crude. So 4% lower in trade yesterday, and that gives a shot in the arm to the Indian market. So the world markets, if you just see, will not have behaved in the same way as the Indian markets are. The Dow was a day of recovery, remember, for the Dow as well. It was at a point of time about 500 points lower and ended about just 125 points lower. So a day of recovery for the Dow. The Asian markets are not really terribly under the cloud, and the SGX Nifty points towards a bounce back, led predominantly, I would reckon, by what crude prices have done. In fact, we are very close to flirting on the Asian Pacific indices, with very close to flirting to bear market territory, because all the Asian indices have come off. Cumulatively, the index has come off nearly 20% and very close to that red line below which you can officially proclaim that we are in the bear market territory, but doesn't seem to be that case today at least. The trade setup, well, financials led the gain in late rebound yesterday. HPCL led the OMC stocks higher in the last 1 hour, and that's probably a lead indicator of sorts. So HPPP, IOC, all of them went up in the last 1 hour of trade yesterday. The breadth improved ever so marginally in trade yesterday, and the crude cool-off, as I said, could well have a bearing on how our markets should do in the session today. In fact, what's also happened the last 3 or 4 days, and I've been noticing this, is that the fund flows or the high selling northwards of 1,000 crores, 1,500 crores from the FI side has ebbed. So look at what happened on 23rd October, 340 crores net sell number. Look at what happened on 22nd October, about a 512 crore net sell number. 19th October, which was Friday, 618 crores. In fact, the day before, which is 18th October, we had a small buy number of 140 crores as well. So that large selling of northwards of 1,000 crores from the FI side has clearly ebbed. Yes, DIs are not buying, but at least the large FI selling is not happening the last 3 or 4 sessions, which should also augur well for sentiment. A bunch of results lined up in today's session as well. So you'll have Bajaj Auto, Bharti Infratel, Kotak Bank amongst others, and Wipro. Important to see what Wipro does after what HCL Tech and Infosys have done, because IT is under a bit of a cloud. And let's see what the big boy from down south has to say about the quarter and the outlook ahead as well. And a clutch of other mid-cap numbers as well. So IT remains the focus. Hexaware, KPIT Tech, L&T Info come out with numbers today. Very important to monitor those. Jubilant Foodworks, Interglobe Aviation, the first loss since listing, I reckon, would be interesting to watch what that one does. And Sterlite Tech, marquee name, still trading at higher valuations because the growth is expected to stay. We'll figure out if that's happening or no. However, what will react at 9 a.m. or 9:15 a.m. today, that's important. So 3 or 4 large caps, a bunch of mid caps that will, in likelihood, all likely would react in the session today. So Bharti, Airtel, and we'll of course talk about the news. Summit will come in and talk about it as well. We're going to raise about $1.25 billion by diluting stake in the African unit. They already have 6 investors on board. Could be an interesting one to monitor this morning. Oil marketing companies, the stocks should react positively again today after the crude cool off. Yesterday there's a bit of an uptick in HPCL already. Let's wait and watch if there's more in store. Adani Ports, so revenues and the profit were down, but the volume growth was strong. I think Mcguire in a note mentioned that this volume growth number augurs very well for Adani Ports. So let's wait and watch what this one does in the session today. Lower than estimated numbers, to my mind at least, for all these 3 large names. So Ambuja Cement in line with what the other cement companies have done. Bajaj Finance wasn't the best quarter for them too, I guess. And ICICI Prudential maybe left a bit to be desired. We'll hear from the management at 9:30 today any which ways, but important one to monitor. And last but not the least, we get a howler or two from mid-cap IT almost every second day. I don't know if Saskin fits the howler bill or no, but frankly, the numbers leave a bit to be desired. EBIT margins came off quite dramatically for Saskin at 10.4% versus 14.3%. The other income was down, and which is why the PAT was substantially lower, but a downtick of 16% on revenue, 40% on PAT. I would believe that the stock could well react negatively today. Let's wait and watch. However, what's lined up on first word today? A bunch of things. Will crude prices remain under 70? Actually slip down to about $70 per barrel as well. We asked Peter Mcguire of XM.com for the same. Airtel Africa's stake sale will help the parent cut off some of its debt. Sumit Johnson to put the numbers into perspective. Agam then lists out the key takeaways from HCL Tech's earnings, and then Shraddha tells us what to expect from Kotak Bank. However, crude oil prices trade steady after falling to 5-week lows yesterday. WTI hovers around that $69 per barrel mark, while Brent trades near $76. Will this relief last, or is it temporary? Let's ask Peter Mcguire, Chief Executive Officer at XM.com, joins us on the phone line from Sydney. Peter, good having you. Thanks so much for joining in. There's been a sudden drop in crude prices from 85 3 weeks ago to about 76 for Brent and sub 70 as well for NYMEX. What do you expect the near term to look like?
Well, good morning. Thanks for inviting me on the show. A couple of things. First off, I think that we've all seen that massive sell-off. It's taken the market by surprise over the last couple of weeks. There was many analysts saying you could have seen, a $95 push, maybe even 100. But the issue came to play that there are geopolitical concerns, and also we're seeing what Saudi Arabia has said, they're going to pump and keep on pumping. And, they're increasing the spigot. They're worried about those sanctions coming into place as far as Iran, and they're going to make whatever effort is due or possible to satisfy the market from a demand side.
I read your mail in the morning, Peter. The Iranian oil minister's comment notwithstanding, the fact that Saudi Arabia is saying that if there is a shortfall, they will go out and raise output and ensure that there is enough crude supply. This may be political maneuvering at play here as well, but would all of this and the upcoming midterm elections in the US ensure that crude prices don't go up, even if they don't fall too much from these levels?
Well, that's exactly right. There are so many moving parts. You've got the Khashoggi issue we're all very much aware of, and Turkey's involvement there and what they're trying to, get to the bottom of. You've got President Trump and you've got the midterms, and take on board that. He naturally wants to see, and he's pressured OPEC all the way through to say, we want cheaper crude, we want cheaper crude. Now it's coming to play. Also, we're only about 6 weeks out from the December 6th meeting in Vienna, the 175th OPEC meeting. So at the present, I think there's probably further downside. There's certainly an uneasiness as far as equity markets, and there seems to be that very, very solid push, and that's going to be, ever present to map through anything that Iran gets dished out. We're going to make it up, and that's what Saudi's whole involvement is, and they're taking a big boy approach to satisfy the market.
No, just one final question, Peter. I know it's very difficult to put a guess as to what will happen 1 month down the line, but I heard you mention that you believe there's further downside. What do you expect in the near term? From 76 odd right now to a barrel, do you reckon there is a higher probability of we seeing 70 before 80?
I would say so. I think there's more momentum to the downside. It'll bounce. There's no doubting that. We've all been around long enough to know you'll see a whipsaw out of this market over the next probably week. It may even bounce Friday. But it'll only bounce a couple of percent up, and then I think there's further downdraft because Saudis are they will play the game with Russia. They'll meet any expectations that the market has as far as what the shortfall. And if they're coming out there I noticed the oil minister saying that quite simply, we are going to do whatever's needed, and that's going to have an impact to the market to the downside. So I think 70 is a lot closer to C than 80.
Peter, good having you. Thanks much for taking the time out and joining us and giving us that perspective. Now, any other normal day with Sumit Sarkar coming up, I would have asked him, with crude prices doing what they are doing, what's the impact on OMCs? But Sumit, no. Today we'll talk about Bharti Airtel because that will raise about $1.25 billion from a clutch of investors by diluting the stake in the Africa unit. The deal values Africa business about $4.4 billion. He's here with the contours of the deal. What's the deal about? What would it mean for Bharti Airtel?
So firstly, they'll be raising close to $1.25 billion US by selling stake in its profitable African business. Now, foreign investors like Warburg Pincus, Temasek, Singtel, SoftBank unit and two other players will be subscribing to the new shares of the African business and will be investing close to $1.25 billion. So this by this infusion of 1.25 billion, Airtel will look to bring down the debt of its African business, which is currently close to $5 billion US, and some of this will also be used for the growth of the African operations. Now, post this, Bharti Airtel is also planning an IPO for its African unit, which is expected to be happening over the next 1 year, and the proceeds from that will also be used to reduce the debt of the African business. Now, post this transaction, the entire equity value of the Africa business will be close to $4.4 billion US, and according to our calculation, the enterprise value to EBITDA of this deal would be close to 7.5 times. Now, if you see in the last 12 months, the EBITDA of African business was close to $1.1 billion US, while the enterprise value of the Africa business is close to $8.2 billion US. So the EV to EBITDA would be close to 7.52 times, which is largely in line with the other listed players. Now, if you see the enterprise value of listed peers of Bharti Airtel in Africa, that is Maroc Telecom, MTN Group, Vodacom Group and Safaricom, now they are trading at close to 4 to 8 times their FY19 enterprise value to EBITDA. So this deal is largely in line with its peers. Now, Bharti Airtel will be diluting nearly 1/3 of their stake in the African business for this fresh investment. Now, post this transaction, Bharti Airtel will own close to 65% stake in the African business, which will be down from around 93% currently, while the new investors will own close to 28%, while the remaining 7% will be owned by the minority shareholders. Now, why this fresh infusion was needed? Well, this fresh infusion was needed for Bharti Airtel to put up a hold on its rising debt and leverage ratio. Now, if you see over the last 4 quarters, the company's consolidated net debt has been increasing, and as of the June quarter ending, its consolidated net debt was close to 1,02,000 crore rupees. Also, its leverage ratio, that is net debt to EBITDA, that has also been on a rise, and for the June ended quarter, it was close to 3.61 times, that is at its all-time high. So this fund infusion will help it reduce its debt to some extent, well, not a much bigger amount, because the proceeds would be less than 10% of its total consolidated debt, but at least some debt of the total consolidated business will come down. Now, some details of the Africa business. Now, if you see, the Africa business of Airtel has been doing good over the last 9 quarters and has shown some strong growth over the last 9 quarters. The total subscriber base of the Africa unit is close to 9 crore, while its ARPU is close to 197 rupees. Now, the revenue generated from the Africa business was a little more than 20,000 crore rupees in the last 12 months ending June, while the profits from the Africa business has been growing on the cost saving initiatives that the company has taken. Now, if you see over the last 9 quarters, the company's EBITDA, now that is largely doubled from $151 million US in the first quarter of financial year 2017. It has increased to $289 million US as of June quarter ended, and its EBITDA margin of that has expanded to around 36.4% from 20.6% reported by the company in the first quarter of financial year 2017.
Okay, Sumit, we'll watch out for this, and let's wait and see what kind of reaction do we see on Bharti Airtel in the session. My guess is that with the market also looking optimistic and there being some fund infusion, irrespective of the valuations, there could be some positive reactions that we could expect for Bharti Airtel today. Thanks for putting that into perspective. That's Sumit Sarkar for you, bringing you up to speed with Bharti Airtel news. Now, HCL Technologies may have lagged behind large cap peers in the second quarter, just as expected, though. That's the key point. The management can maintain its growth guidance for the full financial year. Aggarwal filed this report from HCL Tech headquarters in Delhi.
Well, with a revenue growth of 3% in constant currency terms and 2.1% growth in terms of dollars on a quarter-on-quarter basis, well, it's been a fairly inline quarter for HCL Technologies. We've seen margins come in at around 19.8% versus 19.7%, again in line, and it's the same for the profitability, where your net income saw a rise of around 5.7% in rupee terms. Now, among the key takeaways, firstly, when it comes to guidance, the company has maintained its guidance when it comes to its revenues at around 9.5 to 11.5% in constant currency terms, and it is the same when it comes to margins at around 19.5 to 20.5, despite the fact that the company has had a little bit of an uplift or a boost because of the depreciation of the rupee against the US dollar. Among other highlights, we must mention the Mode 2, that is the new generation services, and Mode 3, that is largely the product services, or rather products for the company. Well, those two segments have seen good growth coming in, perhaps higher than what the street was working with. On a constant currency term, sequentially, 5.3% growth for Mode 2, and the products vertical, or that Mode 3, has seen about a 10.4% growth in what is a seasonally weak quarter. And this is something that the company has also mentioned. The management is suggesting that there could be more strength in store specifically for Mode 2 and Mode 3 services. That said, in terms of some of those key services, infrastructure services, where the company gets good 37 to 38% of its revenues from, has starting to see a little bit of an uptick, where we've seen about 2.5% growth on a quarter-on-quarter basis. Do remember the management had suggested in the previous quarter that it had recorded the highest bookings in infrastructure services. Application services, once again, a third of the revenues come from this particular service segment, which only seen about 0.4% growth. Again, perhaps a key vertical here is the financial services vertical, where good 25% of your revenues come from this particular vertical. That has seen a subdued 0.1% growth, as against, well, very strong growth for the likes of TCS and Infosys, and that is something perhaps that also stands out as far as this quarter's earnings go. On the whole, it's been a fairly steady earnings quarter for HCL Technologies, and we'll just have to wait and watch whether or not they can continue, especially on the back of the plans that they have in organic growth. But on the whole, online and inline set of numbers and steady set of numbers for HCL Technologies.
Thanks for that, Agam. Frankly, I thought two key points: the organic pickup in HCL Tech's numbers that they've spoken this time around, and less compression in IMS post FY19 are the two key takeaways. And to my mind, HCL Tech would well start off marginally positive in the session today. You can catch the management's talk about its growth prospects for FY19 at 8:30 a.m. on Bloomberg Quint. Okay, lastly, Kotak Mahindra Bank is expected to post a healthy growth once again. Asset quality too is likely to remain stable. Shraddha Babla is standing by with what analysts would be watching out for this quarter. What is it that she would want to hear from the management as well? Shraddha, good morning.
Right. Neeraj, I'm going to start off with the key expectations. Of course, overall it's expected to show a steady performance, not only on growth but also on the asset quality parameter. So in terms of the key numbers, net interest income is expected to come in 17.4% higher at 2716 crores. Net profit is seen about 18% higher at 1173 crores. So that's the number that the street is working with. And margins are expected to remain steady sequentially at about 4.3%. The operating profit growth, however, might be a little stronger than the bottom line growth, largely on account of the benefit from lower OPEX growth and also healthy traction which is expected in the NII and other income growth. As far as the loan growth is concerned, that is expected to come in at about 20 to 25% as the bank continues to gain market share. No negative surprises expected on the asset quality front. In the June ended quarter, the gross NPA numbers stood at 2.2% and slippages at about 320 crores. So numbers are expected to remain around those levels. But two important things to watch out for are going to be the management commentary with respect to the business banking segment, that is SME, where they had flagged off concerns in the previous quarter. So that's one thing. Performance of key subsidiaries is going to be also watched closely, but most importantly, clarity with regards to the plan to bring down the promoter stake is going to be the most important, because the RBI has denied extension to Uday Kotak, he needs to remember bring down his stake by nearly 10% from 30% to 20% in about 2 months by 31st December 2018. That in fact has acted as an overhang on the stock. The fear of equity dilution or acquisition which will have to be made in a very short span of time, which are the 2-3 major options that the bank actually now has. So any sort of commentary on that will be key to watch out for. But as far as the Q2 numbers are concerned, expected to be steady.
We'll watch out for this. Thanks a lot for that, Shraddha. Appreciate that. Well, that's all that we have on First Word today, but lots more lined up on the show after this break. Earnings fine print with the management of HCL Technologies, the CEO C. Vijayakumar and CFO Prateek Aggarwal joining to talk about that. We'll also speak to the MD and CEO of ICICI Prudential Life Insurance, NS Kannan, at 9:30 a.m. to discuss that quarter gone by. And then Lemon Tree's CFO Kapil Sharma Johnson at 9:45 to talk about how the business is looking like and the launch of a new hotel in Dehradun ahead of the festive season.
Good news, got a promotion and a damn good raise.
Congrats, beta.
वाह, raise? अब तो insurance policy ले ले.
कौन सी कंपनी से लूं?
Choose वही जिस पर हो पूरा भरोसा.
That's good. But आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC. Trending with times. 62 सालों से हर generation की पसंद.
It's not about the award. It never is. It's about what went before and what came after.
It's about getting recognized for the trust and confidence the customer has shown on us. We actually strive for it.
It's about the brightest ideas and cleverest implementations. It's about innovation.
It's about impact for manufacturers and help for shoppers. Tangible, meaningful impact for manufacturers who innovate and genuine help for shoppers looking for the best new things on the shelves.
It's not about the award. It is about standing out. It's about being a giant even if you're really, really small. It's about picking the leaders of tomorrow, today. It's not about the award. It's about competing.
It's about an unbiased, countrywide, face-to-face consumer survey that is unique and provides relevance and differentiation. Essentially, we're adding something to the marketing arsenal of product teams.
It's about doing one's best and raising the bar each time.
So it's about the end customer. You know, if you have that clarity, what is this need that you're trying to solve for the end customer?
About exceeding expectations. About going all in. Coming. Product of the year.
It's about feeling good that we are associated with Product of the Year. This is our 10th year.
30 years of finding brands that capture a billion.
Hello and welcome. You're watching Indian Open right here on Bloomberg. Going to quick check across Asia to see how we're set up for trade this morning and whether or not we will see a positive indication coming in there. The Asian pack, though, fairly subdued in terms of the price activity. Just a marginal cut on the Nikkei, Shanghai and Hang Seng, trading under by 0.1% or so. For the SGX Nifty, though, the cues are slightly more positive. An optimistic pricing move, 10,236 26 on the upside. That's more than 0.5% gain. So anticipating a positive start for us at 9:15. But let's quickly take a look at what's been happening in the futures and options space as well, because Neeraj, it's going to be important to see the kind of build up that we'll go into in the month of November, because now the range is pretty stationary around the 10,000 mark, because yesterday we took down 10,200, and going into expiry now we're going to be seeing whether the rollovers start to pick up or no, because at this current point they're probably slightly lower than average. We'll have to see whether that picks up or no. So November series and the concentration of the puts, which currently lies at about the 10,000 strike for the October series, whether that gets pushed forward into the next month or no. But in all, the overall options activity itself has been slightly more subdued. So there's not too much of, a persistent support level that's being created. The addition of new open interest is not happening at a faster pace this time. So which could be, a little bit of a question mark, because then it raises a directional question, whether which side the traders are betting on right now, because they're not building up heavy positions on either side.
Right. And considering the fact that the first few days will also be low on trade because of the holiday season as well, maybe November expiry or the November series will not maybe start off on a big bang note. Just one quick question, how have rolls looked thus far?
Well, the rollover figure right now, they are almost at par. They're not probably seeing an extension, but you will wait and watch for one more day to come by as they pick up. So closer to about 56, 57% is what you're hoping that you will get.
Okay, let's wait and watch. FNO expiry this week, so important one. Now, let's focus on some exclusives as well. A couple of news that we spoke about in the morning in the headlines. Kraft Heinz, one amongst them, which will sell some of its products in India to Zydus Wellness. The deal, which is expected to be announced as early as this week, will see Cadila Healthcare's India arm buy brands like Complan, Nycil and Sampriti Butter. George Smith-Alexander of Bloomberg News joins us for more. George, how much is Zydus going to offer for these brands?
So it looks like they will pay about 4,600 crores for all these brands put together. And the way the deal seems to be structured is, it will be obviously through an SPV where the parent will put in some of the money, and roughly half the money would be from some of the private equity players. The deal, it has to be seen on how these guys manage these bunch of assets, because if you look at its Complan from one side to Nycil and then ghee to it's like a cocktail of these assets which are being put together. So
but you learned that the deal could be announced as early as this week.
Yeah, it should be as early as this week, and I guess there would be a closing time for another one more month for them to close the deal. So,
and this 4,600 crore odd number, is this way different than what you would have earlier anticipated when the first rumblings of this deal came about?
So Kraft wanted $1 billion. Obviously, then this is much lower than what the $1 billion would be. It's a portfolio, or it's an asset where the sales are not the way it used to be compared to earlier. So obviously the valuation has dropped from where it was.
Okay. So in quick 60 seconds, I'm just jumping guns. ArcelorMittal, and you finally have some details.
Hopefully, yeah. So the way it looks like it is, as far as the lenders are concerned, they will get 39,500 crores. This is directly from from Arcelor. The company has a retained earning of around 2,500 crores odd. That money will again go back to the lenders. So effectively, the lenders get around 42,000 crores. There could be a payment made to the operational creditors to the tune of around 1,000 crores. So that could be the additional money which Arcelor would be paying to the different lenders and other people. I guess there's some taxes and other money which Arcelor would also have to pay, but would be interesting on how that gets done.
Deal Street galore. George Smith-Alexander, thanks for putting all of those into perspective, and thanks for joining in this early in the morning and giving us that update as well. Well, that's a couple of things that you need to watch out for. Time now to hear out the HCL Tech management in conversation with Agam Vakil.
Hi, this is Bloomberg Quint, and I am Agam Vakil. Like always, I'm here at the HCL Technologies headquarters to take stock of the quarterly earnings of the company. And I am in conversation with the management. We have President and CEO C. Vijayakumar, and we have Prateek Aggarwal, who takes over the position of CFO in the company. Thank you both for joining me. Okay, so I'm going to start off with, I want to discuss 2 or 3 things here. and among them will be verticals and services line, but I'm going to start off with financial services. CVK, you spoke about a ramp down in 2 clients last quarter. This time around, growth has been sluggish. A lot of questions out here, but 2 major ones. One is, when can we expect things to even out? And 2, considering the fact that some of your peers have started to see a recovery, what can you tell us about the outlook for this particular vertical?
Yeah, I think first is, before I even go to the vertical flavor, overall we remain pretty positive about the demand environment, our ability to demonstrate incremental growth. We seem to feel more confident at this time. In terms of verticals, there are different dynamics playing out in verticals, and specifically in financial services. Across the board, we are seeing very good momentum, not just in booking, but even the pipeline looks very good in financial services. However, as I mentioned last time, we have 2 clients. One is a little more insourcing, and other customer is cutting down on some discretionary spend. And we expect that pressure to continue for a little while. So barring that, we will definitely have an industry-leading growth in financial services.
Can we put a number, a couple of quarters, 3 quarters before that particular headwind?
It's very difficult to predict this over many quarters, but at least next couple of quarters, yes.
Okay, CVK, so that I will follow that up with infra services. Again, last quarter you did suggest that you had the highest bookings. Again, 2 parts to this question. First is, I want to know about the nature of the new bookings that you've had. And secondly, if you could give me a little more of an idea when it comes to renewals for this quarter.
Yeah, I think in terms of overall deal wins, this quarter we signed 17 transformational deals across all service lines. And the infrastructure services, obviously the revenue momentum that you're seeing is backed by some of the bookings that we have done in the previous quarters. In the past quarter, the verticals which had significant wins in infrastructure services is in the retail CPG space, a little bit in the financial services, and the rest spread across all the verticals that we have. Sure. And some of this will reflect in the revenues in the next 2 quarters. So we feel fairly confident of the growth momentum in the infrastructure business on the global side.
Okay, well, Prateek, then I'm going to come to you on, margins, of course. Now, everyone on the street was, of course, expecting the benefit of the currency to be offset by wage hikes. But if you could give us a better idea, perhaps a breakup of how margins have panned out for this quarter.
Sure. So, like you already mentioned, the Forex gain is there in the numbers. Right. It is about 90 basis points for this quarter. Equally, like we had mentioned previous quarter, there is a 70 basis points impact of the wage increments. Right. So that's kind of, if you just do the math, 19.7% last quarter, 19.9% this quarter, leaving all other factors aside, that plus 90 minus 70 just sort of matches the math.
Right. Prateek, what I also found very interesting was that you had some tailwinds from productivity and automation. Yes. That comes to roughly 70-80 basis points, if I'm not mistaken. If you can correct me if I'm wrong. Can you tell me a little more about that? And if this is possibly going to remain a tailwind in for the foreseeable future?
So we did have productivity and automation linked gains, which is coming from both the utilization of the manpower that we have, as well as the automation and orchestration initiatives that we have from a dry ice platform. That amounted to about 80 basis points. But then again, we have kind of invested it back in the Mode 2 business primarily, but across the board actually, where you would see that in the Mode 2 margins, and we have invested back in the SG&A, and that is where we are plowing the savings that we've got to sort of get more of growth going forward.
Okay, fair enough. Well, okay, so I want to talk about application services. Again, it's been a sluggish quarter, but you spoke of digital practices now playing an important role. That said, can you give me an idea about when we can expect a little bit of recovery based on the fact that you guys are investing so much in digital practices?
Yes, I think the application business will also get incrementally better. Some of the if you see our Mode 2 business, it has grown about 5.3% quarter on quarter. Right. A lot of that is digital and cloud and IoT, and a significant part of that will add to the application services revenue. and we think it'll get better in the subsequent quarters. And
Right.
this quarter it has been soft, as I said, due to 2 clients in the financial services.
Right. Well, I was actually looking at the contribution of engineering and R&D services too, which now is a fifth of your revenues, more than a fifth of your revenues.
Fourth of our revenue, almost 25%.
All right, fair enough. Okay, so in that case, to what extent would you attribute the growth to acquisitions, and what can we expect as we move into the next few quarters then from here?
See, engineering services last quarter, it's been one of the best quarters from a services perspective. There is, of course, the Actian acquisition got consolidated. That's
Right.
already in the engineering services.
Yes.
But this is also seasonally a weak quarter for the product business. So that will be, that more almost entirely offsets the gain that we have due to Actian, and a little
Right.
bit of benefit due to the new IP partnerships. So overall, if you look at the services, it's been a fantastic performance. And we see this trend to some extent continue, may not be at the same levels, but we will see good growth rates in our core engineering services as we move forward.
Okay. And with respect to investments earmarked, Prateek, could you shed some light on what is the quantum that you have earmarked and possible areas that you are actually going and allotting these investments into?
So before I answer that question directly, I do want to talk about Mode 3 as a business, which we about 2 years back, around the same time, we really started meaningfully investing in that.
Sure.
And that has this quarter hit a milestone of $1 billion run rate.
Sure, yes, absolutely, yes.
So that's something we feel very pleased about, meaningful milestone that we have crossed.
Right.
As far as our strategy on the net profits and the deployment, we continue what we have said earlier also. Roughly about 50% is what would go back to the shareholders, either as a dividend or as a buyback. You also would have seen that we just closed on 11th October, we just closed our
Right.
latest round
Yes.
of buyback, about 4,000 crores.
Right.
And the balance 50% of the net profit is really earmarked for areas which are strategically important for us, and we would like to continue to grow inorganically in those areas as well.
Right, but that's what I wanted to ask, and you can come in on that. What are those areas at this point in time that you guys are putting in money in?
So we will continue to put money more into products. That's certainly one thing that differentiates us. Our strategy is completely different from any of our peers that you normally talk about. And on the services side also, we would keep investing like we have in the last 2 quarters.
Okay.
Because there are always those pockets where you may not be fairly represented. It presents a growth opportunity either from a vertical, sub-vertical perspective or a geography perspective, and we would continue to invest in that.
Okay, well, I actually wanted to conclude the conversation with the highlight of this this quarter, and that is the robust performance that we've seen in Mode 3. So, and this is surprising considering you already spoken that it's a seasonally weak quarter. Is it safe to assume that it would be Mode 2 and Mode 3 which would drive growth as we move into the next few years for that matter?
Yeah, I think I want to also specifically call out in Mode 3, while one part of the business has a seasonality, but there is a lot of organic IPs that we have developed over a period of time.
Right.
So there are 20 plus products that we own, which we have built, and they're all in the new areas around automation, machine learning, and some modern PLM capabilities. All of that is caused this headwind, in terms of tailwind for the Mode 3 business this quarter, and we see a similar momentum continuing here.
Okay, well, I wish you all the best for the future. Thank you so much for your time, gentlemen.
All right, that's the management at HCL Tech in conversation with Agam on their quarterly performance. Expect the stock to probably see a slightly more positive move. Numbers were, though, in line with street expectations. HCL Tech in the recent run-up has been one of the underperformers, as IT, as we know it, over the last few trading sessions, has been seeing a slight bit of a pummel. Aside from that, let's talk markets then. And hopefully today, looking at what SGX is doing, we do see a positive start. But let's bring in Pankaj Pandey, Head of Research at ICICI Direct. He's joining in right now with his views. Pankaj, I'm going to start off straight with the view on HCL Tech, and how did you read into the numbers?
So overall, the numbers of the company were quite good, but I think the company did not sort of revise their guidance for the revenue and the margins, which was slight disappointing a bit. But we would expect some positive movement to happen in the stock, given the fact that the stock is quite attractively valued. But within the entire IT space, I think Infosys looks quite good to us because I think their deal wins have been pretty strong, and we would expect them to sort of catch up both in terms of growth and in terms of valuation relative to TCS. So I think that is our topic in the sector at this point in time.
Okay, that's Infosys in the larger IT space that Pankaj likes. The other one is a Kotak Mahindra Bank that reports its numbers today. What are you anticipating, considering, the positioning of most of these private sector banks at this current juncture?
So within banks, if you look at, I think Kotak Mahindra Bank, we are expecting a steady set of numbers with advance growth of about 22%, and largely the NPAs would be quite stable at about 2.2%. I think what remains to be seen, or what will be interesting to note, is that how the recent regulation on Aadhaar will impact their 811 accounts, and how the bank is going to mitigate that. But I think overall, for the entire private sector banking space, we are expecting a good NII growth of about 17% and a similar kind of a bottom line growth. Largely, I think in this particular quarter, we have not seen a good amount of resolutions happening. So probably resolutions will happen this quarter, so which is why the results for most of the PSU banks and corporate heavy banks will be a bit subdued. But overall, I think banking as space looks quite attractive, and given the fact that NBFCs are facing a lot of challenge, I think the allocation is likely to shift more towards banks. But our preference is the corporate heavy banks, so Axis Bank and SBI are our topics.
Okay. Pankaj, there are some other numbers that came out, and we'll talk about those as well. But Ambuja Cements in particular, and continuing in line with what some of the other cement companies have done too, do you expect a bit of the negative reaction is already in the price because of the fall that almost all cement companies have done? Or would you believe Ambuja could react negatively today as well?
So largely, Neeraj, I think a lot of reaction is already there in the prices, because earlier even the results for Ultratech were also a bit soft. But I think this is a sort of a lean quarter for them, and not much was expected. I think if you look at one of the key concerns was on the raw material side, especially the petcoke prices. We have seen some softness in the petcoke prices, and given the fact that the companies would be taking some bit of a price hike, and some of the raw material concerns are sort of easing off, I think all these corrections are good corrections for to sort of enter these stocks. I think the kind of tendering and ordering what we have seen is still quite good for the last 5 months. So, and given the fact that we are approaching elections, we would expect that the tendering and ordering to remain at elevated levels. So I think cement is a good pick, and whatever concerns were there, especially in terms of pricing and the raw material side, I think they have sort of eased a bit. So this kind of a correction should be used as an opportunity. For the current quarter, we were expecting good volume growth of about 13.8% with pricing growth remaining negative at about 1%. The bottom line was expected to decline about 24%, like I said, because of the input cost pressures and higher diesel prices. I think some of that concern is easing, so which is why I think even if there is a negative reaction, I think one can look at cement as an entire pack, look at entry into these stocks.
Okay, got that. Pankaj, just stay on with us. Lots more to talk about. But in the meantime, our research team is here with us. We're going to be highlighting lots more in terms of earnings, numbers that are going to come out today. So get you a preview. Some strong numbers, some weak numbers that came out post market hours yesterday. I'll start off with you, Shraddha, on some strong numbers.
Right, so I'm going to start with the smaller names. Tata Metallics, which saw revenue growth of 21%, EBITDA grew by 28%, and on account of that, we saw margins rise by nearly 100 basis points to 15.7%. Net profit also grew by about 42%. You also have OptiFiber. That's a small cap company with very strong performance, largely on account of a lower base, of course. Total income grew by 22%. EBITDA more than doubled to 40 crores, and net profit came in at 17 crores as compared to a number of 5 crores in the previous year quarter. Even for HDFC Standard Life, the business momentum remained healthy and the VNB margins moved up further. So the net premium income came about 26% higher. Net profit grew by 20%. On the other hand, ICICI Prudential Life Insurance, not a very strong set of numbers. In fact, I would say in line. The protection business grew well in this quarter, but VNB margins were under pressure. Overall, net premium income grew by 16%, but net profit fell by 29% on account of lower investment income and higher OPEX expenses. And what was disappointing was that the 13-month persistency ratio fell from 83.5% to 82.7%. So ICICI Pru more in line.
All right, Shraddha, thanks a lot for that. Nikki, what about some weak numbers?
I'm going to start off with Ambuja Cement, a disappointing show reported by yet another pan-India basis cement player. Revenue growth in line, 12.6% uptick there, 2,613 crore. EBITDA, it's a flat performance there, but a miss. Numbers have been reported at 358 crore. Estimates were around 421 crore. Profitability down by 35% for this counter. Volume in line with estimates, a 9% uptick. Realization too has risen as much as 3.5%, but EBITDA per ton, a key metric here, that's almost down and out by 7.1% in this quarter, weighed down by freight and fuel costs. Rallis India, yet another bad set of number reported by the company. Revenue up by 12% for this company. Net profit has shown a 6% growth, and the operational performance of the company, importantly, that's just up by 2%, almost flattish growth out there. Margins in turn have shrunk to 21% as compared to 23%. Bajaj Corp, pretty much flattish quarter. Revenue up by 4.2%. Net profit has been flat. EBITDA is up by 3.6%. We've seen input prices on rising trend driven by the crude oil prices and weaker rupee. The commentary itself is not so encouraging. The company says that they're going to be the uneven monsoon may result in the lower growth in the coming quarters. Sasken Technologies, well, a no good show there itself. Consolidated basis, revenue down by 16%. EBIT 39%. Downtick on account of disappointing top-line growth along with the higher employee costs. Net profit down and out by 40%. Other income for the company is down by 52%, which in turn has led to bad set of numbers coming in also from Sasken Technologies.
All right, Nikki, thanks for that. Some numbers that are going to come out today, Bajaj Auto being a key one to watch out for, Yatin.
Yeah, so Devina, the trend for the auto companies is similar. We could see some margin pressures coming in despite strong volume growth. But talking about Bajaj Auto, the standalone revenues are seen at close to 8,000 crores. That will be a growth of nearly 21% year on year. This is on the back of a 25% growth in the overall sales volume for them. EBITDA also, we could see a growth of 6%, and profits are seen growing at only 2.5% to come in at 1,140 crores according to the Bloomberg poll. Margins, as I was saying earlier, could be under pressure because of rising raw material costs, and more importantly, this time the product mix has been weaker, because of which the margins could face some pressure. So the margins are seen at 17.4% versus a level of 19.7%. Apart from the numbers, of course, we'll talk to the management regarding their commentary on the domestic demand scenario, especially in this festive season, and the rural markets, and also how really are the export market poised to grow, given the fact that oil prices are moving up, which augurs well for their export markets, and more importantly, the margin outlook moving forward would be something important we'll be watching out for.
All right, Yatin, thanks very much for that. And another set of numbers from the aviation pack, we got Interglobe and also Bharti Infratel.
So I'll start off with Interglobe Aviation. It is expected to be a weak quarter for Interglobe Aviation. Now, if you see the headline numbers, the revenue is expected to be higher by nearly 23% to close to 6,500 crore rupees, while the EBITDA, which is the profitability metric for an airline company, that is expected to decline by nearly 57% to close to 665 crore rupees. Now, this could be the highest ever decline reported by the company since listing when it comes to EBITDA. Now, margins are also expected to contract to nearly 10% from 29% reported by the company last year, while the company is also expected to report a net loss for the very first time since listing, and in this quarter the net loss amount is expected to be around 470 crore rupees as against a net profit reported by the company last year of close to 552 crore rupees. Now, three factors that will lead to such a bad financial for Indigo. Well, first is the weaker ticket prices, second is weaker rupee, and third is higher fuel prices. Now, if you see in this quarter compared to last year, ticket prices are expected to be lower by around 3%, rupee had depreciated by close to 9%, while fuel prices were higher by nearly 41%. And these three factors will be impacting the financials of Indigo in the second quarter of financial year 2019. Now, one thing that could surprise investors in this quarter could be the Pratt & Whitney compensation. So we'll have to see if the company receives anything from that side, and that could be the only surprise factor for Indigo earnings in this quarter. Lastly, key things to watch out for would include the volume growth and yield guidance that the company gives, how many aircraft the company has inducted in this quarter, and the updates on the neo-related engine issues that the company has been facing. Along with this, any fuel price guidance if the company gives, and any future updates on the future plans of the long-distance international routes would be key things to watch out for from the Interglobe earnings. Now, Bharti Infratel will also be reporting its numbers today, and the numbers are expected to come in post-market hours. Now, the quarter is expected to be weak for the tower company on the back of consolidation. Now, if you see the headline numbers for Bharti Infratel, on a consolidated basis, the revenues are expected to fall by nearly 2.4% to close to 3,600 crore rupees. Now, this could be the biggest fall in revenue for Bharti Infratel since listing. EBITDA is expected to be down by nearly 5% to close to 1,400 crore rupees, and this will be the fourth consecutive quarter where the company would see its EBITDA decline. Margins are expected to come in at around 40.4%, which could be the lowest ever in the last 20 quarters, while the net profit is expected to decline by nearly 5% to close to 605 crore rupees. Now, the key number, that is the tenancy ratio, that is expected to come down to around 1.93 times, and this would be the first time in the last 18 quarters where the company would see its tenancy ratio fall below 2 times, and this will be on the back of the Vodafone Idea merger, which was announced in between the quarter. Now, because the merger got completed, the merged entity cancelled nearly 27,000 tenancy rights with effect from September 1st, 2018. So the financials will see this 1 month impact on the numbers and on the tenancy ratio. However, some of this will be offset by higher tower rentals because the tenancy ratio had fallen. The tower rentals are expected to go up for Bharti Infratel. Lastly, key things to watch out for from the Bharti Infratel earnings would be management commentary on further tenancy impact, any update on the merger related to Indus Towers, and outlook on the tenancy growth that the company has will be key thing to watch out for from the Bharti Infratel earnings.
All right, Sharma, thanks very much for that. So that's a whole gamut of stocks that we need to watch out for in trade this morning. Let's bring in our technical analysts as well. So Chandan Taparia is joining in right now. Chandan, I want to go straight up first on the index. Yesterday, we took down a crucial level of 10,200, and considering that we are so close to expiry, what are the levels that one needs to keep in mind?
Yeah, very good morning. Yesterday, index opened negative but managed to recover from the lower levels. However, it made the new recent lows at 10,100. But the recovery from the lower level is remarkable. Because of that, it formed a doji candle. So because of that, some bounce could be seen. However, the medium-term trend could remain under pressure. But the way it is taken support in the lower zone with decline in the volatility by more than 10% indicates that some sort of consolidation or bounce could be seen because of the expiry week. So as of now, if it manages to hold 10,100 zone, then expecting the bounce towards 10,250, 10,333 kind of level. So would go forward playing the bounce back more in the market. But yes, the medium term trend could remain under pressure. So traders are suggested to play as a bounce only.
Okay. Chandan, in light of the fact that we also have an expiry coming up, what would your positioning be on specific stock names for the morning today?
Yes, as you discussed about the expiry, in this expiry, the Nifty is down by around 7% and is trading lower than its volume weighted average. This comes near to around 10,500 zone. So lower than volume weighted average, so overall the bears would put the market under pressure at higher zone. So bounce could be sold again. But if you look at the Bank Nifty index, that is almost flattish, so that remain resilience. Underperformance is clear, outperformance is clearly seen there. When Nifty is down by 7%, Bank Nifty is flattish. So some sort of buying interest could emerge in the Bank Nifty, and especially we are Yesterday, Bank Nifty opened negative, and that was the opening low, and recovered by around 250-300 points from lower levels. And because of that, expecting bounce towards 25-250, 25-500 zone. So here, getting more comfortable setup in Bank Nifty compared to the Nifty, looking at the expiry point of view. So some short covering could be seen in the selective banking counter and the Bank Nifty index. So looking at the same in mind, we have positive on the 2 or 3 names to play the small bounce back, especially ICICI Bank, Axis Bank and HDFC Bank. And here I have a long trade on HDFC Bank. The stock has recently taken support at its major support trend line and also respecting to its 50-day weekly exponential moving average. So recommending to go long on HDFC Bank with the stop loss of 1960 and expecting it to move towards 2035 kind of level. Second trade, that is on the Hindustan Petro. We have seen the strong recovery in HPCL on last trading session. And on weekly scale or the daily scale, it is forming a small lower degree pole and flag pattern. It is all set to give a consolidation breakout of last couple of trading session, and because of that some buying could emerge. And again, falling crude is positive for this stock as per the data indicates. So expecting this positive momentum in Hind Petro, which may take it to 228, 230 kind of level. Either one can play with the future or can trade in 220 call, which is trading near to 3.5, 4 rupees, put a stop loss of 1, and this call can move towards 10 rupees.
Well, the Asian screen seems to be abuzz. So Deven was just pointing out Shanghai. On the terminal, we can see the Shanghai index is up 1% now. But the important part is that it was not up when we started off the show. At 8 a.m., Shanghai was trading with a small tick of red. It is now up 1%.
Hang Seng has moved into the green. We were down closer to 0.1% for all of the indices. Nikkei has not done anything, but Shanghai has seen a big spike in the last 10 minutes of trade, and probably uplifted by that. I think even the SGX Nifty, it was up closer to 0.5% when we last took a check, and now the SGX is pointing towards a 1% uptick.
Yep, so there is an intraday movement out there. So good news for the Nifty Bank. In a bit, Gaurav Bissa will join in. We'll talk to him about some of these trades on the index as well. Chandan Taparia, of course, has given us his trading bets as well. Pankaj Pandey, a stock where I thought that the numbers looked okay on the volumes front is Adani Ports. While optically the numbers were bad, the stock has corrected about 25-30% from the recent highs, and the volume numbers look solid. Is it a buy, or is it a hold, or is it a sell?
Neeraj, we don't cover the stock, so I will not be able to sort of comment on that.
Fair call. Do you cover Saskane Technologies, Pankaj?
No.
Okay. How about the oil marketing companies? What's the view there? Crude cool off. Do you think there is some upside in the OMCs today or in the near term?
So for the current quarter, Neeraj, we don't expect much to happen because the GRMs are quite flattish at about $6.1. And now the benefit of rupee depreciation would have accrued to these companies. But now my sense is that if the crude corrects, what will also happen is that the pressure on the rupee also will go off. And accordingly, my sense is that one should not be turning too much bullish on the oil marketing companies. So overall, this space looks negative to me. I think gas as a space looks quite attractive. So whether you look at GAIL or whether you look at Indraprastha Gas or MGL, I think that is the space one should be into. Otherwise, the upstream or the downstream sector, I think, will keep getting impacted depending on how the crude moves. But structurally, I don't see that these are portfolio stocks, even though the fact that these stocks are trading at 7 to 8 times multiple, so which is quite attractive.
Okay.
Yeah, I just want to mention one stock, and that's Saskane Technologies. I was trying to ask Pankaj about it. Something tells me that when the quarter was not right, I mean, the numbers are showing that. Don't know if on a good day, mid-cap IT stock, which is disappointed, can correct too much or no. Plus, the stock has corrected 21% going into the numbers, but not the best quarter. EBIT margins at 10.4% versus 14.3%. Profit is down 40%. Yeah, so, and the PAT is down 40%. There was some other income reduction as well. But the fact that EBIT margins have gone down 400 basis points tells you something about gone wrong this quarter. Wouldn't be surprised if there is a bit of a red tick on a very good green day on open.
Well, you know, looking at the past trend, meeting expectations doesn't give you much. So coming way below expectations is probably something that the market is not going to take favorably. We're just a 1 minute away from the market pre-open, and it looks like a slightly more stronger start. Gaurav Bissa is here with us. Quickly, Gaurav, 30 seconds, your index strategy before we come back and talk about your stocks.
Good morning. For index, I would wait some more time. 70-80 point gap up would not be that good for the market. We have seen on last couple of occasions gap being sold into. But any dip towards 10,180, 190 can be bought. Stop loss of 10,140 on the upside. Targets of 10,260, 280 can be seen.
All right, so more optimistic outlook here on the Nifty. We're up 1% now for the SGX Nifty, so the start expected to be slightly more stronger. But then again, you're going to see whether or not the contribution comes in and stays. These kind of gains, probably you see the opening tick and then towards the end of it starts to fizzle off. For the currency as well, we'll see how that opens up. 73.57 is where it shut. We're going to see how that opens up for trade as well. But obviously, the backdrop of crude falling could lend some support to the equity markets as well. Some cheer could be seen on the back of that too. Market pre-open on your screens. You've got the Nifty as well as the Sensex, as probably gauged from the SGX performance, is up closer to 1%. All right, Nifty is moved into the red now, but that's because Reliance is showing you a 10% cut, but that will cool off in a bit. Reliance and Infosys both are showing you 10% cuts. Let's talk about a few other stocks which are not showing you cuts of 10%. So before we'll give this time to cool off. But Bajaj Auto ahead of numbers is down 0.6%. You've got Adani Ports, which has moved lower. Hero MotoCorp is flat, not too much of a change there. HPCL is showing you a 10% uptick, and most of the oil marketing companies in the back of the low crude oil prices are seeing an uptick today. BPCL is up about 4%. Indian Oil is up about 3.5%. Tata Motors has moved up 2.5% higher. IndianOpen Bank is up 1.6%. Bharti Airtel is up 1.4%. Should see where Asian Paints is after yesterday's free fall that it had. Stocks up 1.2%. So after yesterday's 6% cut, there's some semblance coming in there. Titan is also up in the session. 787 is where it's trading in. At pre-open, SBI is up. Indiabulls is also trading higher. So the breadth on the index, at least, slightly more positive. I just want to see if the prices have come off. HDFC Bank is showing you a 6.5% cut yet. Infosys is down about 6% right now.
Well, the mid-cap end of the market, I want to see what Sasken is up to. Is it throwing a surprise or is it reacting as per what the results were? Well, not a big bang cut, just about 4%, but maybe what is also helping that cause today is the fact that the stock has come off at least 20% before the numbers, but let's wait and watch. This could well change. The rupee is open very strongly. Just before I get to some other stocks, just want to mark the currency, 73.16. Remember, what's happening to crude would have an impact on the currency for sure. Maybe the yields too, but 73.17, so a bit of a pullback for the currency. The bond yields at 7.88, so that's a bit of a red tick, but very flattish for the bond yields in the session today. Ambuja Cement, has it reacted to numbers? Again, a stock that's come off quite rapidly ahead of the numbers, so don't quite know how much more downside because of the results purely, but the stock marginal in the red. If my memory serves me correct, at about 200, this would be trading very close to replacement value. I don't know if that helps. Zensar Tech, the numbers were okay. The stock looks like starting off higher, so maybe about 8%. At least the first ticks on the pre-open seem to suggest that. No other big reactions. Maybe the OMCs will react positively, but that's probably about it. On the flip side, on the losing side, Bombay Dyeing continues to grind lower, so now down about 5%. Emphasis looks like starting off slightly weak. Let's wait and watch what happens there. I don't know if the currency strengthening anyways puts a bit of a shear on the gains on IT names, and therefore there could be some further course corrections. Motilal Oswal, which has consistently been falling, looks like starting off another couple of percentage points lower at 581. So there's a bit of weakness that we might see on that stock too. Let's wait and watch some interesting names.
HDFC Bank, Neeraj.
Yeah, but I think it's unnatural, Devina. Yeah. I don't think it'll have this kind of a start. This has to pull back. So these are probably freak trades, and those will change. Pankaj, mid-cap IT and a clutch of results are out already. Anything that stood out for you, whether on the upside or on the downside? Because there were a few disappointments, and stocks like NIT Tech and maybe Zensar did do reasonably okay.
So within the mid-cap, I think Mindtree was a bit of a sort of a shocker, given the fact that the expectation of double-digit growth was there, and the company delivered a very muted set of numbers. But I think within the mid-cap IT names, we are expecting Sonata to sort of deliver a decent set of numbers. That is one stock which we have been liking for quite some time. Otherwise, I think largely most of the results have been sort of in line with expectations. So Sonata is something which I can sort of recollect at this point in time, which we like.
Gaurav, Bissa, let's talk about some stock ideas from you.
Among the long ideas, OMCs are looking interesting. HPCL is one that has been consolidating. We have seen some additions happening in the auction as well. 215 was a immediate hurdle. It's given a comfortable close above this. It can now head towards 230, 235, and can keep a stop of 214 and buy HPCL. Asian Paint is another name. It has more to do with technical. It has been trading in a 5-year upward sloping channel. The supports are placed at 1110, 1120. And it's bounced back result from those levels. As long as it's trading above this level, there's a possibility it may again jump towards 1200, 1225 kind of zone. So one can keep a stop loss of 1110, 1120 and buy Asian Paints for target price of 1200.
All right, Asian Paints, after yesterday's fall of about 5.5% seen a little bit of an uptick in today's session. Chandan, are you looking at Asian Paints, or for that matter, any other paint names? Kansai Nerolac has been beaten down of late. Berger Paints yesterday saw a steep cut.
See, we have seen selling pressure in Asian Paint or all these paints company. These are making lower top, lower bottom formation, but gone into the major support trend. As Gaurav also mentioned the same. So taking support as a major trend line on the monthly scale, and because of that some bounce could be seen. However, it has broken the immediate support, so again bounce could be restricted. But as of now, the way it formed a dozy candle after the decline, it recovered from the lows. There is potential to again retest to us 1180 to 1200 zone. So one can play for the bounce back on Asian Paint to us 1180 to 1200 kind of level. Looking at the other paint counter, Berger Paint is also finding some support at lower levels. It opened negative but managed to hold its opening gains and recovered from the lower level. So here also we are expecting a bounce to us 275, 282 kind of levels.
Okay, Pankaj, fundamentally because of the correction and then the ensuing result season that is now we are firmly and truly in the midst of, anything that becomes a long-term purchase idea for your clients, not necessarily only in the mid-cap space, even in the large-cap space, one or two names and the reasons thereof?
So if you look at some of the companies which we like, so one of them within the large caps is Aurobindo Pharma. I think the company is following a different approach compared to some of the tier 1 names. I think with the kind of muscle which they have on the production side, I think they are really not chasing the niche segment which a lot of tier 1 names are chasing. So from that perspective, this stock looks attractive, and I think they've got a decent amount of exposure to Europe and US. So I think this stock looks attractive to us within the tier 1 space. Not to say that this current quarter earnings we are expecting a great set of numbers, so that is not the case, but for the next 1 or 2 years. I think retailing is something where we are seeing an interesting set of numbers. So ABFRL, I think, looks attractive to us given the fact that your Pantaloon has been already doing a good double-digit kind of a growth. And I think the Madura as a segment, I think, which was not sort of performing for the company in the last 3-4 years, I think that has started to perform since last quarter. And we are expecting a good set of numbers. So I think this looks attractive to us. In cement, Heidelberg had come out with good set of numbers in the previous quarter also, and this quarter also we are expecting a good set of numbers for this company, because in the central region the prices have been sort of holding up because of the impending elections in some of the states like Madhya Pradesh. So we would expect that good trend to sort of continue for this particular player, given the fact that pricing is firm. So we expect a good set of numbers. We have seen a decent crack in the stock. So these are the kind of names which we like within the overall market.
Leave it at that. Many thanks for joining in today and giving us your thoughts. Really appreciate your time. We want to take some ideas on some of the aviation companies as well, because they are all starting off very well today, primarily because of the crude fall. But getting an initial thought from Deven Choksey first, T. Johnson from KRChoksey Securities. Deven, the crude cool-off augurs well for the market, and we'll get to that in a bit as well. But just a brief word, the usual suspects that will react today, do any of them look like stocks that you would be happy to log in and park yourself? Be it OMCs, be it aviation, be it something else. Primarily because of crude impact.
Yeah, good morning, Neeraj. Well, yes, I think there will be a reprieve, there will be a recovery rally, I think, as I would like to call it, in some of the OMCs as well as aviation companies. The question mark would be that how much it can sustain and how much thrust it would have from the investors to, and the conviction investors would have to buy them into. It's a difficult question to answer. As such, I think the market is not sustaining even the trading momentum for a few hours. I think forget about days. So it's difficult to say that I think whether this particular positive would help propel the what you call the aviation stock as well as I think the OMCs in the market and sustain at higher price. I'm not ruling out the possibility of recovery, but I think my doubt would be on the sustenance part of it. I think it might give in very quickly after I think recovering from the lows. So not too sure whether I would like to buy them into and probably add them into the portfolio at this point of time.
All right, Deven, just stay on with us. We're just minutes away from market opening and we'll tell you all that you need to know to stay ahead and trade today. Let's begin with earnings. 4 nifty companies report earnings today as well. The list includes the likes of Bajaj Auto, Kotak Mahindra Bank, Bharti, Infratel and Wipro.
Amongst non-index names reporting numbers today include Bharat Financial Inclusion, Jubilant Foodworks, Interglobe Aviation and Mahindra Financial Services.
Adani Ports, HDFC Life, ICICI Prudential, Tata Metallics and Optifiber are among the companies that reported a strong quarter post-market as yesterday.
On the other hand, Ambuja Cements, Saskane Technologies, Rallis India and Bajaj Corp reported weak quarterly numbers.
Bharti Airtel will partially reduce its stake in its African unit, Airtel Africa. A group of 6 global investors will invest a sum of $1.25 billion in the company. Proceeds will be used to reduce debt and for growth.
And lastly, Sun Pharma has launched its psoriasis treatment drug Ilumya in the US. The stock up about 1.25% in the session today, early morning trade today. Okay, the pre-open rates have settled down 10,278 for the benefit of, and the Nifty Bank too looking like starting over 340 points higher. Chandan, what should an average index trader do? Because we're starting off about 1.25% higher.
See, as of now, expecting the more strength in the Bank Nifty index. However, it's opening positive, so I'll wait for a small dip. If it comes near to 25,150 kind of level, then one can go long by putting a stop loss of 25,000 to play the upside move towards 25,500, 25,650 kind of level. So my suggestion is wait for a small dip from opening level, and I think that will be the best strategy to initiate the long position in the Bank Nifty index as of now.
Yesterday's trade saw Sun Pharma dipping about 4.5%, which is big for index-heavy pharma name. Even Lupin was down. So most of the top high market cap pharma names saw a dip in yesterday's session. Is that a good trade here? Because these were considered the safer haven names and they've started to fall off over the recent past. Gaurav, if there's a trade in any of these names?
Well, many of the pharma names are looking a little bit susceptible, and I would be a little bit watchful among them. For Sun Pharma, the supports are seen at levels of 575, so that can be used as a stop loss play for upward targets of 600, 605. Below 575, the view is chill, and we can expect some more downward pressure in Sun Pharma. For the time being, a 1.5% stop loss can be utilized for a 3-4% up move in a day or two. 3
days on a trot now. Indiabulls Housing Finance looks like it's done well. So it has done well, rather 2.5% up in today's session as well. For somebody who had a long in Indiabulls Housing Finance, Gaurav, would you take money off the table now or stay long?
For somebody who's already bought at lower levels, I think one should hold on to, play with trailing stop losses. We have seen a significant correction. It's in deeply oversold zone. Even a technical bounce can lead towards level of 800, 805. So one can keep a trailing stop loss of 720, 725. On the upside, one can expect another 4 to 5% up move. But if somebody wants to play fresh, it is best avoided.
All right, I think we've got 1.5 minutes left to go. Let's quickly take the top calls from our technical analysts. And Chandan, I'll start off with you. What is the one stock that you're banking on as you enter trade this morning?
I'll play with oil marketing company, or in fact, we recommended on last trading session as BTST as well. Recommended to be with 220 call, and if opens much higher than trade in 225 call, expecting this stock to move towards 228, 235 kind of levels.
All right, that's HPCL 235 levels is what Chandan is expecting. Gaurav, what about you? Your top call for the day?
It would have been HPCL, but I am not an advocate of buying it gap up or gap down level. So one can play with Asian Paints as well. I expect 20 to 25 kind of levels in a day or two.
All right, so not HPCL, but Asian Paints is what Gaurav is looking at from a top bet point of view.
1160 on Asian Paints as well, so good one there. Just very quickly, 20 seconds, Chandan, would you trade Interglobe Aviation today? Day of results, the stock starting off 5% higher.
Yes, some buying interest could be there, but volatility could be there. 805 would be support, upside 850 kind of level could be seen.
Okay, now Interglobe Aviation is the one that we're talking about, and that's the stock that Chandan Taparia just gave a call on. So do watch out for Interglobe Aviation in the session today as well. But 14 seconds left for the markets to kickstart it. We'll have a start firmly in the green. That was aided predominantly by crude. I mean, no rocket science here. The question mark only is, do we see some selling emerge at those higher levels, or do these levels stay sacrosanct? This is how we're starting off, about 1.25% higher for each of the key indices. The Nifty Bank about 1.5% higher, excuse me. And the mid caps and the small caps haven't done too badly either. I'm sure they haven't done too badly either. Let's get them up on the screen, but presumptive on my part. But let's just get the mid caps and the small caps up to, starting off on a good note, the mid cap index at least 1% higher. The small caps about 0.6%. The heat map, don't think there'll be too much of red on the screen. In fact, just one stock, which is Wipro, marginally in the green ahead of its numbers today. Otherwise, it's a sea of red. Bajaj Finance, strong bounce back, up 5.5%. HPCL about 4.5%. Indiabulls Housing about 4.5%. So the merry ways continue. But essentially, we'll see some bit of crude play out here. So OMCs could do well. We're interested to see what ONGC as well as Reliance have to do. ONGC about a couple of percentage points higher. And Bharti Airtel on news is up about 3.5% higher as well. So this stock certainly revs up in the session today. So in terms of the newsmakers, and by the way, it's all green on the screen right now. All 50 Nifty stocks trading in the green. This is a strong start, and the index is just up about 1.25%. That tells you some story, really. But it's a strong start to the trading day today. Watch out for the oil-related beneficiaries. I think they will react well. Bajaj Finance as well as Bharti Airtel are the non-oil companies which have started off really, really well in the session today. But just a couple of pockets that I want to highlight before I hand it over to Devina for what's happening at the broader end of the spectrum. Essentially, the crude cooling off will impact the OMCs. So BP, HP, IOC, and all three of them start off on a positive note. My guess is that aviation would have started on a positive note. The question mark only is that strength lasting? So Interglobe Aviation about 3.5%, Jet Airways about 3%, SpiceJet is the big one, up 4%. Keep in mind, Indigo's numbers slated to come out today, expected to post the first quarterly loss that we've seen the company post, if ever. So it'll be interesting to see what Indigo does. Last but not the least, amongst all this good news, let's look at a stock which came out with a disappointing set of numbers and a big result reaction for Saskane Technologies. Starts off about 10% lower. So after Mindtree and Persistent, one more mid-cap IT company that has had a double-digit loss on results. Devina, what are you spotting?
And I'll quickly highlight them before we move on to the broader market and the picture out there. So starting off with Rallis India that reported its Q2 numbers post-market hours. Revenues were up about 11.8%. The stock's up 2.5%. Bajaj Corp is the other one. Net profits moved up marginally, just 1.8% higher. The stock's up closer to 1%. You had Aksh Opti Fiber with a profit of 17 crores versus 5 crores. The stock's seen a strong move of 3.5% in the morning session. HDFC Standard Life is the other one that I'd like to highlight. Net profits were up 20% this quarter. Stocks up 1.5%. Aside from that, Linde is up closer to 6%. Indiabulls Ventures is up 5%. Canfin Homes is up 4.5%. So there's strong moves coming into most of these names. Interglobe Aviation, we already highlighted that. It's up 4% now. Jet Airways 2. Deven Housing has moved up 3%. Apollo Tyres took a knock of 6% yesterday. Trade slightly more positive in today's session. Radico Khaitan is up 3% in trade this morning. Dilip Bulcon is up 2.5%. Edelweiss is up 4% at 149 right now. So there is some interest coming in there. Ujjivan Financial is up 2%. HCC, JK Tyre, CID. So most of the tyre companies, in fact, are doing okay for themselves. 2.5% plus for most of them. Godrej Industries, Equitas Holdings, L&T Finance Holdings are up closer to 1.5%. So the breadth looks positive this morning as we have it. It's almost a 1:8 in favor of the advances.
Yeah, a lot of NBFCs are bouncing back, and we'll take in opening thoughts from Chandan as well as Gaurav Bissa in just moments from now. But Deven, Choksey, this bounce back, would you believe that you would sell into, or is this constructive enough because of the crude cool-off?
Neeraj, on one side, I think the corporate fundamentals and I think the earning growth outlook remains extremely convincing. In a normal situation, I think with the economy growing at this rate, I think market should not have, I think, gone into the kind of a tailspin I think that is right now into. Unfortunate part is that I think our market is completely dictated by, I think, the FII selling into it, and probably their bigger play into the derivative market is also causing good sum of, I think, volatility in the markets. So if one factor which is not convincing to me is the factor of, I think, rampant speculation and I think FII selling at this point of time. Should this continue, probably I think whatever the strength that we are talking about on the fundamental side, I think will not sustain, and that's the worry. Otherwise, in a normal situation, had you asked me this question, I would have said, I think, clear possibility of market bouncing back. I say when accept, I think, this situation wherein I think you are not having certainty about how FI is operating and how I think the selling that they are doing right now in the market. I think this is a cause of worry for me at this point of time.
Deven, how did you read into Bajaj Finance's numbers? I mean, while the management has maintained that they will be expanding balance sheet at the rate of about 25%, they don't see any setback to that. The profits came in at about 920 odd crores. AUM grew on a standalone basis by 24%, consolidated basis 38%. How was that for you?
I think what better performance one can ask for from a company like Bajaj Finance, I think, in this kind of a situation. I guess I think it has beaten all the expectations in the market. And why I'm more convinced about this particular company is that I think they have a short tenure lending and the recovery is equally fast. So to the extent of, I think, the non-performing asset creation in the books, I think it's systematically saved. That is one important aspect. Their business model of subvention prices, I think, is definitely working very well and giving them the NIM which is the highest in the industry. The lending quality probably, I think, is among the best in the industry, including, I think, some of the private sector banks. So if you ask me, I think the quality of the business that the Bajaj Finance has created in each of the verticals, be it SME verticals, be it retail verticals, even a separate company called Housing Finance, I think everywhere I see the kind of a systematic risk measurement and I think the growth coming into the business. So I think the stock price has corrected and that is giving an opportunity for sure. So at current levels of around 2,100, I think this particular company is favorably trading even at the valuation level. So my conviction is that I think this particular stock would remain winner within the basket of the NBFC space, and including, I think, in some of the private sector companies where it can probably give better appreciation to investors.
All right, and as we speak, going from strength to strength, 6.5% almost up for Bajaj Finance. Chandan, would you trade a Bajaj Finance?
Yes, expecting some short covering in most of the NBFC counters, especially Bajaj Finance, M&M Finance and Indiabull Finance is per se. Bajaj Finance recently surpassed his falling supply trend line, again retested them and turned from the same with dozy candle on last trading session. So some bounce could be seen here. It is seeing the positive divergence or some short covering could be seen here. So expecting it to bounce to us 2270, 2280 kind of level.
Okay, and Tata Motors, I mean, this stock's not gone anywhere, trading at around 174 right now. Today is up about 2%, but remember the last 1 month's performance has been slightly more disappointing, giving you a 30% downtick. In the last 7 days, the stock's already down about 5.5%. Gaurav, Tata Motors for you?
One can play for a move towards 180, 182, have a stop loss of 170, but one should not be looking for a reversal or bottoming out in the name. But yes, for a bounce back, one can use a stop loss of 170, play for 182 kind of targets.
Bajaj Auto reports its numbers today, slightly more muted on the profit side. That's the expectation, Bloomberg expectation. But Deven, what are you factoring in for Bajaj Auto, and what kind of management commentary will you be looking forward to?
So yes, I think the probably this particular quarter should be one of the best quarters I think that the company has produced in last so many years. I think we are observing this company at. I guess I think on the domestic market side that they have been able to, since the numbers are already out on the volume side, the domestic market side I think they are already I think plus the market share also, including the entry level market share where they double the market share. So that is one thing which is positive, working positive for the company. But the most important part is the export business, which is continued to show robust growth. And in the currency depreciation time, I think it is only adding to the advantage in a particular quarter like this. So if you look at on one side, I think 40% plus revenue coming out of exports, domestic market share they have gained, and at the cost of the competitors. I would think that I think the company should be in a position to, I think, show relatively far better performance, I think, than what one is expecting. So let's wait and see, I think, what the numbers are going to be. But my hunch is that I think the numbers are going to be stronger than we have expected.
Deven, are you buying any of the NBFCs? I mean, we spoke about Bajaj Finance, yes, but Canfin, Edelweiss, actually even banking names, the likes of RBL Bank have bounced back today. Would you believe that valuations for some of these have corrected enough for you to go out and buy them, or are you staying out?
So conviction is very high in Bajaj Finance, Bajaj Finserv and Kotak Bank. I think these three companies, I think, where we remain relatively more convinced compared to others. Not that other companies may not be able to show performance, but the fact is that I think when you are in this kind of a market where certainty is less, you would like to stay with the quality, and that is where I think I find that I think two Bajaj twins and I think the Kotak Bank, I think they remain relatively more favorite. Kotak Bank also because of the fact that I think they are on the bank of basically monetizing the assets that they have been creating in the books, or verticals that they have been creating in the books. As we have always said that I think the financialization is going to be the next theme, which would probably allow some of the private sector banks to I think get the best benefit out of it. And that's where I think we like Kotak. So selective list, short list rather, I would think that I think we stay with quality.
Okay, Deven, before you leave and closer to Diwali, anything that stood out for you as a purchase, something that you've felt that your clients can invest fresh money in?
So Maruti looks tempting. I think given the kind of correction that we have had in Maruti and some sort of I think the performance I think which might get affected because of the currency movements, still I feel that I think the valuation wise Maruti is looking tempting, apart from this Bajaj twins which I have talked to you. So I think if you remain selective, I think you will get the best out of it. In the auto space, particularly Maruti and Ashok Leyland, these two companies along with Bajaj Auto, I think remains I think very favorite in our list of stocks. So yes, I think we have limited range, but yes, we want to stay selective into these companies.
Okay, Deven, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us your perspective. Really appreciate your time.
Thank you.
It's all about NBFCs, frankly, the bounce back today. But I must say, crude beneficiaries are getting impacted. So Gaurav, I heard you that you don't want to play the OMCs and you would play the crude uptick via paint company. I'm throwing two more names at you. One of them is SpiceJet, no results, so or maybe a Jet Airways. The other one though is Apollo Tyres, which is also bouncing back 4.5% today.
Well, Apollo Tyres is one that we had recommended as a BTS to our clients as well. But I would not say that one should buy here. There's a strong resistance at levels of 210, 212. Some amount of shorts were seen getting built from these levels. So we can see some upside towards 207, 208. But fresh buying should be avoided, as we can again see some of profit booking in the next half of trading session. So I would not be too interested. Jet Airways, it's in the Oswal zone near the immediate support area. So one can expect a bounce if it sustains level of 210, 212. One can expect levels of 228, 230 coming in. It will be 3-4 day call. But again, I would not be playing with very aggressive targets or very aggressive positioning.
Okay. Emphasis, it's sub 1,000 now. The stock has lost 7% in trade today. At 992 is where the stock's currently trading at. TVS Motors reported numbers yesterday. The stock yesterday was up in trade by about 3.5%. Today, down about 1.5%. And ICICI Pru will chat with the management in a bit on the back of numbers. Stock's down about 1% in trade right now. Any of these stocks, Chandan, Emphasis, TVS Motors, ICICI Pru?
Looking at TVS Motor yesterday, it recovered well, but again it is finding some hurdle at higher levels. So again, I'm waiting for a dip, and I think this stock is now forming some bottom, because in the last 3 to 4 weeks, the stock is somehow holding the gains even after the market decline. So waiting for it to get stability. I'm waiting for a dip towards 525 and 5 kind of level, where I can get the opportunity for a bounce towards 550, 560 kind of level. And talking about the other IT name, I think we'll wait for IT counter. However, we have seen some selling pressure, especially the Tech Mahindra is showing some sign of weakness. So we'll avoid to going on the IT. And talking about the ICICI, you asked about ICICI Pro, but I'll reply on the ICICI Bank. We are quite positive on the ICICI Bank. The stock is continuously holding its gain and supports are gradually shifting higher. It is expecting to 50-day exponential moving average. So here we have comfortable move and expecting it to target towards 345, 350. And talking about ICICI Prudential, now it is taking multiple support near to 310 zone. So if it manages to hold the support, then only will stick to the long position in the counter.
Okay. Chandan as well as Gaurav, Bissa, gentlemen, thank you so much for staying back and giving us your thoughts. Really appreciate your time. Well, those are our experts talking about some specific names as well, views on ICICI Bank and ICICI Pru. I must say, just keep one stock at the back of your mind as we hit this break and then come back with corporate discussions. Wipro is down another 2.5% now, back to 301 for Wipro. Ahead of the numbers, there is perceptible weakness out here. It's not the only one, by the way. Emphasis is down 7.5%, but and Sasken Technologies too has reacted negatively to its results. Emphasis got to do with the buyback. Remember, the record date for the buyback is tomorrow. So do keep that at the back of your mind. The buyback price, I think, is 1350 or thereabouts.
Yeah. So looking at obviously the current market situation, could expect a lot much in terms of tendering.
Yeah, and Wipro, more importantly, now looking to break the 300 mark as well. So do watch out for this stock too. Okay, take a break on that note on Indian Open. When we return, we speak to the MD and CEO of ICICI Prudential Life Insurance, NS Kannan, to discuss the quarter gone by. And then Lemon Tree's CFO, Kapil Sharma, joins in to discuss the business outlook and launch of a new hotel in Dehradun ahead of the festive season.
Good news, guys. Got a promotion and a damn good raise.
Congrats, beta.
Congrats, मेरी तरफ से भी.
From mama too.
वाह, raise. अब तो इंश्योरेंस पॉलिसी ले ले.
इंश्योरेंस? कौन सी कंपनी से लूं?
सोचना क्या? चूज वही जिस पर हो पूरा भरोसा.
वीरू, go for convenience. My company is online, quick and simple.
बेटा, but पॉलिसी समझाएगा कौन?
वेबसाइट पे सब है पापा. I can even call and ask.
क्लेम सेटलमेंट का रेशो क्या है? मेरी कंपनी का 98% से ज्यादा है.
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
अरे पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC trending with times. 62 सालों से हर जनरेशन की पसंद.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
with Indian Open right here on Bloomberg. Quinn, the markets have maybe cooled off a little bit from the highs of the day, but this could be temporary. Let's wait and watch what happens during the course of the day. The positives are definitely out there because of the crude cool-off. Let's talk about corporates and numbers, though. The pressure of ULIPs on ICICI Prudential life insurance was clearly visible in the September quarter, given the market volatility in recent times. In terms of profitability, the insurer's profit fell by more than 25%. However, the company managed to report nearly 16% growth in its net premium, mainly due to growth in value of new business. To discuss this in greater detail, let's get in Mr. N.S. Kannan, MD and CEO of the company. Also have Darshan from our research team joining in on the conversation. Darshan, over to you.
Good morning, Mr. Kannan. Thank you for joining us. We saw that there was growth in the new value business for the company this time around. Can you give us an indication of what led to the improvement in this aspect, sir?
Yeah, the value of new business during the half year grew by 41% year on year to 590 crores. So this has been a very significant improvement we have had on value of new business. If I look at the drivers of this increase, the primary driver has been the protection business, which has grown at a rate of 77% on a year-on-year basis. That has been the primary driver, and as you know, the protection business comes at a higher margin, so that has been able to drive the VNB business, the VNB for us.
Can you give us more indication what's the traction ahead for the protection APE business?
Yeah, in terms of if you look at the annualized premium equivalent basis, in the first quarter on a year-on-year basis, we had a decline of about 18%, but we've been able to turn it around in terms of growth. In the second quarter on a year-on-year basis, we grew the annualized premium equivalent or APE at 6%. And between Q1 and Q2, we increased the top line by about 40%. So the idea is to take this momentum forward and see if we can put out a growth on a year-to-date basis as well on a year-on-year. So that is the endeavor. If you look at the growth opportunity, I think for the savings part of life insurance businesses like us, I think that in the medium to long term, we can grow at the rate of nominal GDP growth of the country. And within that, if you really look at the protection business, I would say that the protection business can even grow at a much higher rate because there is a huge underpenetration of protection in the country. So I think that the growth outlook for both the protection as well as the savings business of companies like us in the medium to long term is quite robust.
Mr. Kannan, can you tell us how the growth outlook in the ULIP and the term insurance plans, and what's the split there?
Yeah, in the second quarter, we continue to focus on our journey of increasing the protection. So because of that, if you really, and also the top line itself grew quite a bit. So as a result, if you look at the H1 as a whole, the protection business, which comprises the the retail protection as well as the group term business, that has gone to about 8% of our APE.
So can you give us more details of the persistency ratio and the trend going ahead?
Yeah, on the persistency front, this has been a key metric for our own teams, whether it is sales or any other function. So we have been focusing a lot from culturally as a company on persistency, because we believe that it is a value accretive from a shareholder's perspective if the persistency of the business holds up well. Also from a customer perspective, the value can be realized by the customers on a long-term product like a life insurance product only if the renewal premiums are paid and the persistency is quite good. So we have seen a very stable ratio from a 13-month persistency perspective. But if you look at the other buckets such as 2-year, 3-year, 4-year, and 5-year buckets, we have seen a meaningful year-on-year improvement for each of the persistency at those periods as well. So apart from making it part of the culture in terms of the performance assessment within the company, we have also been giving various service points to the customers to pay the renewal premium. We have been making the electronic payments as something which is desired mode of payment, standing instructions. Those are the kind of ways in which we have been able to improve the persistency over years. And I'm happy to say that even under this extremely volatile conditions in the market, the persistency is holding up well for us.
So which channels are bringing business for you, and how's online shaping up?
Yeah, if you look at the channel mix of our business, we are one of the companies which have most diversified channel mix in the insurance industry. About 55% of our business came from bank assurance channel. About 22-23% of our business came from agency channel, and the balance business came from other channels, including our own proprietary direct sales force, as well as some of the online and web aggregators. If I look at the outlook, I feel that the agency channel has much more potential to grow. We would seek to grow that business in terms of recruiting more agents and expanding that business. We also think over a period of time there is a huge opportunity in terms of both web aggregators as well as online platform for selling the insurance products. So I think the mix can get better as we go forward in terms of more web aggregators, more online, and more agency business.
And so finally, before we end, can you tell us about the market share trends going ahead?
Our market share has been hovering between 11 to 12% over several quarters, and for the 6-month period our market share has been at 11.4%. We hope to keep the market share in that range going forward as well.
Okay, that's the view that's coming in from the company. That's about it, Neeraj.
Well, thanks a lot for that, Darshan. So that's, of course, ICICI Prudential, and the stock under a bit of cloud right now. Frankly, just looking at the numbers that have come out thus far, HDFC Life numbers seemed a lot more balanced than ICICI Pru. Wonder what that stock is up to in the session today, because that too should be reacting ever so marginally to the numbers. ICICI Pru is down about 1.5%. Let's bring up HDFC Life up about 1%. So interesting reactions from insurance by and large. Has been okay, but let's wait and watch what happens going ahead. However, on to the next management and, well, hotels and hospitality.
Well, we will wait and watch just to see how the occupancy rates shape up, and there is obviously news brewing in this space as well. As affluence increases, more and more Indians are choosing to see the country, and with that, foreigners are also flying into India. One sector that's got cash register ringing is the hospitality business, and Lemon Tree, which operates 51 properties across the country, is trying to capture a large slice of this traffic. The catch, though, is that it's just one of the many hotel chains in India, all of whom are trying to make the most of this boom. So does Lemon Tree have any special trick up its sleeves? Let's ask the management. Mr. Kapil Sharma, the Chief Financial Officer at the company, is joining in right now. So good morning to you, and thanks a lot for joining in. Let's start off this conversation with the new hotel in Dehradun, sir.
Yeah, day before yesterday, Lemon Tree has opened a new hotel, Red Fox Hotel. This is actually the second hotel in Dehradun. And we already have one Lemon Tree hotel which is under management, but this hotel which is Red Fox Dehradun is a leased property for 40 years, and this is the third hotel in Uttarakhand, because there is another Lemon Tree Premier which is in Corbett. So this hotel is a 91 room properties with the banquet hall, with the conference facilities, and it is well located in the business and shopping hub on the Rajpur Road. So it is going to do quite good business once it is stabilized. And even if I talk about the other hotel, Lemon Tree in Dehradun, it is doing an occupancy of roughly 75% in that market. So we hope that once this hotel get stabilized, and this is the first branded Red Fox hotel, the 2-star category hotel in that particular micro market.
How is the travel season shaping up? Are you seeing occupancies picking across the board, and which regions in particular are seeing a significant uptick?
Yeah, if I talk about hospitality industry as a whole, we are looking that the industry is moving towards the top of the cycle conditions, because occupancy levels on pan-India basis are moving towards 70% level, which is the top of the cycle conditions. Last year, which is FY18, industry did occupancy of 68%. This year, it is estimated that the India occupancy is going to touch 70%. And if I talk about Lemon Tree is already doing occupancy level for the last 3 years more than 75%, because we always get an occupancy premium over the other hospitality chains because of our value for money proposition. And this occupancy levels will lead to further growth in the ARR as well. But there is always a time lag between increase, decrease in occupancy and increase, decrease in ARR. So we see that in this season, which has already started, there would be an increase in ARR across the sector, though it may not be very high increases, but definitely next year we will see, next year onward we will definitely see the high increases in the ARR at the industry level.
Which was going to be my next question, sir. What is the quantum of increase that you're expecting in ARR versus the previous years that you've seen, and what is attributing to this lower than normal increase in ARR?
Yeah, so as Howard has projected that during the period from FY18 to FY21, the demand growth on the hotel sector is going to be 12.5%, whereas the supply will grow at 8%. So you can see the demand growth is twice the supply growth, which will lead to shortage of rooms and lead to increase in ARR. Actually, if we see the India ARR over the last few years, so India ARR, which were 8,500 in FY9, came down to 5,500 in FY15. So now going forward, because of this demand supply positive position for the industry, Howard has projected that the India occupancy will reach 76% in FY21, whereas the mid-scale and economy hotel will reach 80% occupancy level and upper mid-scale will reach at 82%. So these kind of occupancies will push the prices also. It's difficult to say exact range, but we might see that the major increases will be in the retail segment, and corporate might be ranging from 4 to 10% increase. But going forward, as I said earlier, that next year onward you will see the real price hikes and steep hikes.
What's your focus in terms of expansion? I see you're giving a lot of importance to Bombay as a city as well. You've got a license agreement for a 70-room property in BKC, and that in addition to another 2 upcoming hotels. What is the target inventory that you're looking at?
Yeah, so Bombay is a very deep demand market. Rather, if we talk about India, there are 4 or 5 major markets, which is Delhi, NCR, Hyderabad, Bangalore and Mumbai. So Lemon Tree is very bullish in Mumbai, and this is the 3rd property which is under pipeline as of now. We have signed a management contract for a 70-room property, and this property is well located in the close proximity of the BKC. And as you know, BKC is seeing a lot of migration of the offices from other parts of Mumbai. And if we talk about the office space occupancy in the BKC area, it is even now it is around 70 to 75%. So this is going to increase further, which will lead to further increase in the demand for the hotel rooms. But the second thing which is important for this micro market as far as Lemon Tree is concerned, this particular property is the only property in this micro market which is a mid-scale hotel. Other properties being luxury and upper upscale hotels. So this hotel is going to provide very interesting option as compared to the expensive luxury segment, and it is likely to be operational by July 19. Next, the other 2 properties which are owned properties. This particular one is a managed one. So other property which is at a very advanced stage of development is a 300-room Lemon Tree Premier and Andheri Kurla Road. This is, as I mentioned, advanced stage of construction. Finishing work is in final stage, and we hope to operationalize this hotel very soon within this financial year, sometime in Jan-Feb 2019. And the 3rd property, which is the largest in India in terms of number of room, maybe having 671 room, coming at near to the Mumbai International Airport at Sahar Road. So these are the 3 properties which will take our total number of rooms in Mumbai market to roughly 1,040 rooms.
Interesting, Mr. Sharma. If indeed occupancy rates and ARRs are to move up in the next year, are we safely, and you will have a higher supply of rooms as well, which will be available for you, I believe, on stream next year. Are we to assume that FY20 as a year will show substantial growth over FY19, which I remember from the last conversation that we had with you as a company was anyways looking better than FY18?
Yeah, absolutely, because those FY20 definitely the industry occupancy would be more than 70%, and 70% means that for a business hotel, from Monday to Thursday, hotel is completely sold out, and you can price higher also because of the better demand situations and shortage of rooms. So we are seeing that FY20 for the industry and especially for Lemon Tree is going to be a very good year in terms of hike in the revenue, both from the existing hotels, which will see the increase in ARR. Second thing is the new properties which are coming up, like we are opening another hotel in Pune, which is at City Center Pune, 200 room property, which is almost complete, and it is likely to open along with the Mumbai property. So these properties plus the other two hotels which are advanced stage at Udaipur and Calcutta are also opening very soon. So these new properties plus growth in ARR in the old property and stabilization of the hotels which are less than 1 year old, or which are in the category of 1 to 3 years, those will be performing better. So all these factors taken together will lead to much superior performance in going forward, especially in FY20.
So you've moved into the black in FY18 after a few years of losses, and would it be safe to assume that one on the net profit front and two on the EBITDA front, there will be a bit of a J-curve effect that will come into place? What's the guidance that you are leaving for, say, FY19? If not an exact guidance, then a rough ballpark estimate of what you would do on EBITDA and the bottom line for FY19, possibly FY20?
So if I won't like to give exact guidance on that, but I would give some references to this. Like if I talk about, say, Q1, as you rightly mentioned that we move in the positive PAT basis, this will continue to be there. And EBITDA, as I mentioned, there are 3-4 factors which are playing out. So EBITDA is going to be seeing very high growth. If I see Q1 of this financial year, which is off season only, we have seen the EBITDA growth of 30%. Going forward also this is possible, because if you see the last upcycle which happened in 2003 to 2007, the increase in ARR has been to the range of 20 to 25% year on year basis. This is the kind of growth we have seen in the last upcycle. These kind of situations are further coming and will lead to higher EBITDA growth and the profitability position, the PAT position.
But is there a ballpark estimate? I mean, you did about 14 crores FY18. Would it be substantially higher than 14 in FY19? Or would it be about later teens in FY19 and then maybe higher in FY20? Some indication?
It would be substantially higher as compared to the last year PAT.
Okay. Fair call. And I presume that on the debt equity front, you will stay at about 1:2, 1:5, not more than that.
Yeah, currently actually we don't even want to cross 1:1. So even after these all hotels which I just mentioned, Udaipur, Calcutta, Mumbai and Pune, and even the Mile property becomes operational, we will be 0.97:1. So we are under leveraged company. We are not on a high debt equity trajectory, and we will continue to do like that. And as we discussed earlier also, we are going for the asset light growth model, and we are signing more and more management contracts and covering more micro markets. Plus we are entering into the lease property as well.
Okay.
So that do not require much capex, and it is not likely to affect our debt equity.
I wish you all the best for that. Thank you so much for joining in, Mr. Sharma, and giving us those thoughts. Look forward to talk to you post your numbers as well. That's Lemon Tree Hotels, fairly confident of FY19 as a year. The markets though come off a little bit, and I think IT is to be blamed out here, Devina, because Tech Mahindra, Wipro, TCS, Infosys, Nifty IT is playing a bit of a salt sport here.
Yeah, Tech Mahindra is down 2.5% now. Wipro is down 2%. TCS is down 1.5%. So You can see the reflection of that on the index as well. We were up closer to about 1.2% on the index, now just about 0.75%. So mid caps and small caps also probably seeing a little bit of a reversion from the top.
Yeah, and the Bajaj twins are trading in opposite ends. Bajaj Finance is the top gainer, Bajaj Finserv is the top loser. Yeah, we don't often see this, but interesting trends out there. Anyways, with that, it's a wrap on this leg of Indian Open, at least. From Deven and me and the team that put this show together, thanks so much for watching. The FNO show takes forward the action on the other side.